I came back over here to Sausalito to do a second video by the waterfront, and coincidentally, I ended up right by this building over here called Portofino Riviera, which I saw in the news a couple of nights ago that a bunch of the people that live here right now are getting eviction notices. And the reason is the landlord that owns the entire building wants everybody out, okay? And we've covered a lot of stories like this on the channel, and this is the most recent one that I came across, and just coincidentally from being here. And they're trying to basically do the same thing that all these other landlords want to do. They want to increase the price by double or triple, and they're saying the excuse is to get people out of here is to renovate them, and then they're going to increase the rents. But you know, you have people here like 90-year-old women that are living in this building that thought they were going to retire and die here. It's not happening. And I will say to anybody who uses this as an argument of why you should own your own home, most definitely, guys, like when you own your own place, this isn't something that you should have to worry about unless you can't make your property tax payments or afford the upkeep on the home, because when you're renting in old age like this, you can get kicked out, unfortunately. And that's what's happening to a lot of people that live over here. And as you can see, I have my lovely wife, Lizzie, walking with me again today.
Hi, everyone.
She couldn't miss the gorgeous views we're about to see over here.
Never.
So here's the latest thing. Fannie Mae is coming out and saying the housing market downturn is going to last for quite a long time. And this is something that I've been saying here on the channel, and for once, I agree with something that Fannie Mae is saying. And the reason for this is pretty simple, guys. It's because we have high interest rates right now. And these high interest rates are bad news for the housing market, because obviously things are slowing down tremendously because of it. And they think this is going to lead to just having way too much time before things get better. And that's what I think as well, because in an environment like this where we have high interest rates, what happens is it suppresses the market. Like we're seeing transaction volume right now at basically record lows. People are not buying unless they absolutely have to. Same goes for selling. And so the people who have been saying that, oh, the housing market is bottomed and it's all going to just go up from here, are not paying attention to these things. And you even have Fannie Mae coming out and saying that that's not going to be the case either, guys, because there's no way that we can have this situation where the interest rates remain high for quite some time and prices don't continue to go down. Now, I know we saw a run-up during the summer home selling season, which is a seasonal trend that we see basically every year, but now it's starting to slide back down. The question mark is going to be by how much, and are we going to see an uptick again next year? And here's the other interesting thing from this Fannie Mae report, is because they're saying if the U.S. avoids a recession, which I still believe that we already have hit the recession, it's just a matter of are things going to continue to get worse from here or not. But regardless, they're saying if we avoid a recession, they're saying if there's no official recession, then interest rates are going to have to remain elevated for a lot longer, because the Fed has no incentive to lower the interest rates right now because inflation's not going down to where they want to see it yet. And in fact, it's continuing to go back up now. Fannie Mae is also saying that they still think we're actually going to fall into a recession, but now they're predicting that it's not going to happen until the fourth quarter of 2024. So obviously you can see what's the main sequence here, guys. They keep kicking the can down the road, right? The coincidental timing of that is impeccable, right? Right after the presidential election in 2024, then we're going to hit a recession, right? And that's Fannie Mae's official prediction as of me making this video at the end of August in 2023. So a year and a half out almost, and they're saying that's when we're going to hit the official recession, almost like it's planned or something. And this is also another one of my arguments of why I think the housing market still has further to fall, guys, amongst many other ones. But this is just another one here because the experts don't think that the housing market activity is really going to pick up until mortgage rates at least go back down to 5%. We're at 7.5% right now, guys, on our way to 8% potentially by the end of this year, maybe even higher. We'll see what the Fed does at their next meeting, but I don't see them lowering rates. If anything, they'll probably keep them the same or raise them even higher now that inflation is going the wrong direction. But some people aren't getting the message that the housing market downturn is going to last for quite some time. And one of those people is Barbara Corcoran, okay? She's one of the Shark Tank investors. She started her own real estate firm. It's still out there. I think it's called Corcoran Real Estate, something like that. And here's what she said recently, guys. She said that home prices won't fall and that they could jump by as much as 15% when mortgage rates drop. Okay, that's a big when, right? When mortgage rates drop. So let's dive into what she said here a little bit. She says, house prices are not going to come down. I know my hair probably looks ridiculous, but let's roll with it. She said that all hell's going to break loose once the Fed cuts rates and mortgages get cheaper. Every buyer on the sideline is going to jump into the market as long as interest rates come down to 5 or 4%, and houses are going to go up in price all over again. I wouldn't be surprised if they go up by as much as 10 or 15% when this happens. Now, let's do a little bit of background check here to see if there's any validity to what she just said here. First of all, whatever Barbara just said here has never actually happened before in history, and I have proof, guys, because you can go ahead and look at the Fed data going all the way back to the 1950s that will show you that every time interest rates are high and the Fed lowers interest rates, either the housing market goes down or it stalls out and basically remains flat, and if it even does go up, it goes up by very, very little. And you can see this in these charts here, that this is not my opinion, this is just historical fact, okay? So for her to say that home prices are going to soar by 15% as soon as interest rates come down is a dream. It's never actually happened before. Now clearly you can see that Barbara Corcoran is, very optimistic about the future of the housing market. But here's the part of this story that she didn't mention, guys. And maybe she doesn't know this, maybe she doesn't care because she's in the business of selling houses and so is her company. But here's the reality. When interest rates start to come down, as eventually they will, we don't know by when, but first of all, Fannie Mae said that if we're not in a recession, then the interest rates are going to remain high for quite some time. So we might not see low interest rates for a very long time. But let's assume that we go into this recession and interest rates start to fall. Well, what did I just say? We are now in a recession, and that's the reason that interest rates are starting to finally come down. Do you think that's going to bode well? Do you think that's going to be an optimistic future for the housing market and a circumstance for home prices to continue to go up 10, 15% under those conditions? I don't think so. She's not acknowledging the fact that when we actually go into a recession, unemployment starts to go up, okay? People lose their borrowing power, people lose their jobs, they lose their income. That's the reason interest rates are going down. So how do you see an environment where home prices are going to go up 10 to 15% when people are hurting more financially than they are right now? I just don't see it, guys. Now, anything is possible. I'm not saying that's impossible to happen. I'm just saying that the likelihood of this scenario that Barbara is predicting is slim to none, because you've heard it from me countless times. You've heard it from many other smart YouTube channels that talk about real estate on how this is going to play out. And now you're even hearing it from Fannie Mae that interest rates might remain high for a very long time if we don't officially go into a recession. So either way, neither one of those scenarios is good for the housing market, okay? Think about this. If interest rates remain high, it keeps homes relatively unaffordable. And the longer that homes are unaffordable, the less transaction volume we're going to see. That's going to hurt other businesses that rely on the real estate transactions to do well for themselves, and also puts the real estate market in a more vulnerable position for prices to actually come down just from too much time from houses sitting on the market and people needing to sell and get on with their lives. And then if interest rates come down, like Barbara's saying, okay, what are the odds of them coming down to 4 or 5% anytime soon, guys? Especially right now when they're 7.5%. Think about this. The lowest we've seen interest rates within the past year was like 6.3%. So way higher than what Barbara is predicting that they're going to come down to. And I can't understand in what universe that she's living in that this is going to be a good thing. She's flat out denying the fact that there's a housing bubble right now. She just thinks that real estate is going to continue going up. So I like her optimism. In fact, I love positive and optimistic people, but I just don't see it. I don't see the avenue for her prediction to come true right now. And the reason I bring stuff like this up on the channel is to just push back against the conventional norms, guys, because you hear stuff like this and they might actually agree with it. And you can agree with it all you want because you're entitled to have your own opinion, but somebody needs to tell you the other side of it, of how things might not actually work out that way. And hopefully you guys can hear me because my microphone is really being put to the test today with this tremendous amount of wind. So I even had to turn around because it was just driving me crazy, blowing my hair all over the place. And now here's another warning sign from the housing market that people need to be aware of, okay? One thing that is being told to potential home buyers by brokers and lenders, people that have an interest in selling you a home, they're saying that people should forget about finding their forever home right now. You need to just focus on get your foot in the door home. Meaning, buy anything you can before you can't buy anything at all, is basically what they're saying, which is another form of FOMO, or fear of missing out. Planting the idea in your mind that you're never going to be able to buy a house if you don't buy one today. We just talked about how Fannie Mae thinks interest rates are going to remain high for quite some time, guys, probably the next year or two. So now the conventional wisdom from all these real estate agents is saying you shouldn't try to time the market and you shouldn't bet on where future interest rates are going to be. Instead, you should be looking at what you can control, such as your budget and your choice of property, meaning settle for less. Because then they go on to say here, as interest rates rise, potential buyers may need to adjust their price range downward. Really. It also helps to remain flexible and make compromises, such as foregoing that third bedroom or buying outside of your preferred location. Of course they want you to do that. That's how they make money. Doesn't matter if you're unhappy with the home or have major buyer's remorse because you bought in a different area or decided to buy something cheap because that's all you could afford. Now they do say that your house doesn't have to be your forever home, which I agree with, and for, let's face it, most people it's not going to be, guys. But also there's something to be said about making too many concessions and buying a house you flat out don't like because you're being pushed into this idea that you're never going to be able to buy a house if you don't buy one now. And here's the other crazy thing that they're telling people right now, that because interest rates are already at 7.5%, that this could be another reason that you should buy right now in fear of interest rates going even higher. Because a lot of people said, well, I'm going to hang on when interest rates were 6 or 6.5%, and now those people are priced out because interest rates are at 7.5%. I mean, this is crazy, guys. This is really, really bad real estate advice that they're giving out there right now. And if somebody doesn't push against it like I'm doing right now, I'm afraid that too many people are going to listen to that and pull the trigger thinking that they're never going to be able to buy a house again and buy a house that they completely hate just because their realtor said you're not going to be able to afford one in a year from now. However, there is some good news from all of this, because one thing I know for sure is that a good amount of you guys out there who watch my channel are very smart people. And how do I know this? Well, because I put up a poll on my channel a few days ago asking you guys that because so many people are living paycheck to paycheck, do you have an emergency fund and how much? Now, only 19% of you said you have no emergency fund. So you guys definitely need to start working on that and get your finances in order, especially at a time like this when you could be facing unemployment potentially, and we could be heading into the official recession any day now. Another 20% of you said that you have at least 3 months. 3 months is not the best, but it's still better than zero. And 18% of you said you have 3 to 6 months emergency fund, which is the standard advice. And a whopping 43% of you guys said you have 6 to 12 months emergency fund right now, which I think is fantastic, guys. So congratulations to all of you, 43% that have an emergency fund that large, because it's people like you that are going to be able to survive this downturn and likely don't listen to this ridiculous advice that we're being given right now of buy a house before interest rates go even higher and you're never going to be able to afford a house again. That is so stupid. And by the way, this restaurant right here, Aurora in Sausalito, I recommend it. Very good stuff. And of course, all these people like Barbara Corcoran and other real estate agents and brokers that just want you to buy, regardless of your financial condition, regardless of what kind of loan you have to get, regardless of where the housing market might be headed. Here's something that I guarantee you're not going to hear from any of these guys, okay? Check out this little briefing I got from my homeowner's insurance company, okay? They're saying that they have a new sort of coverage that's called service line coverage. And these people here were able to avoid an $8,800 repair bill because the toilets were frequently clogged and the sinks and the bathtubs were slow to drain in their house, and they started hearing a gurgling sound. And so they called a plumber. Plumber determined that tree roots have damaged the sewer line. And in order to fix this, they had to do an excavation beneath the family's driveway, and this repair cost $8,800. And because they had this service line coverage, they were able to get the excavation paid for that cost $2,600. They were able to get the replaced damaged pipe paid for $2,300, and they were able to get the backfill and landscaping restoration done for $3,900. Their total of $8,800 repair bill was fully covered by the insurance company, but it wouldn't have been if they didn't have this service line coverage. So 2 quick little last lessons here for the video. Number one, you can actually get coverage for this if you want it, but keep in mind that if you make a claim on any kind of insurance, they're likely to drop you, especially right now, guys. They're looking for reasons to drop anybody, and I don't care if you're paying for the coverage or not. You make the claim, they pay for it. The next thing you know, you're getting a letter in the mail saying you're getting a termination notice. But anyhow, the other lesson here is that all these people pushing you into buying a house, right? Can you afford this $8,800 repair bill if you don't have this type of insurance, okay? That's what I want people to understand. Can you afford this? This is a surprise expense that I talk about all the time here on the channel. Nobody knew this was gonna happen to them, but it happened. So can you afford this? And if the answer is no, you need to ignore all the nonsense that they're telling you right now that, oh, home prices are going to jump 15% when interest rates go down. Oh, interest rates are going to continue to go higher now, so you better buy now before you can't afford it anymore. It's all BS. If you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.